Guys, this video is going to be about actually how to pass a funded account. As I see, it's such a major topic, and I see so many people struggling with it too. So essentially, I'm going to be breaking down, how to get the payouts, what you do with the payouts, and simply how do you manage your funded account properly too. So the first thing that we need to identify is what is required of us as traders to pass a funded account in order to actually get some payouts and make money from this thing. So the first thing I like to look at is a trading plan. Now, a lot of you people think, okay, cool, I know this, but let's double check. I think it's also including of win percentage, but we're going to get into that a bit later. So first thing first would be actually to choose a session, because I see a lot of guys trying to rush their funded accounts by trading London, New York, Asian session. So simply, London session would open at 9 o'clock in the morning till about 5 p.m., but the volume is based at 9 a.m. till 11, and then the pairs to trade and so forth, right? New York session, 3 p.m. opens, and then 11 p.m. it closes, but the volume that usually is based in this time session is 3:30 to 6:30 p.m., right? Then we have Asian session. Ideally, if you are in South Africa or not in an Asian session time zone, stay away from Asian session. But just to give you some back data on it, it's 2 a.m. open and 10 a.m. closure, right? Then volume is 2 a.m. to 4 a.m. and the pairs that you can trade. As we said, yes, SA should not trade it. Okay, so the next thing is so important, regardless of what account size you get, regardless of anything, the first and foremost thing that is important in order to actually pass a funded account is your trading strategy. So what this kind of looks like is having a proper entry criteria, having something that convicts you to enter positions, right? For example, trade confirmations and confluences, having these confluences in place that has worked in your past trading experience that you're going to stick to, right? And we're going to get into the reason why this is so important. Then we have exit criteria, having a playbook of my A plus setups. This is basically all the trades that you've taken that is literally following your strategy to the T, having a screenshot of them in a little book of yours, whether it's an Excel or so forth, your journal, reading that on a day-to-day basis before you even jump on the charts. And then again, obviously sticking to your rules, one trade a day, not more than that. Sticking to one time session, not more than that. Because if you're trading two time sessions, that obviously means you are trading two trades. Again, I'm not saying that if you don't take a position in London and something sets up in New York, that is fine too. Management criteria, very important. Actually, when it comes to funded accounts, I see a lot of guys, cutting their profits too early, um, and not allowing the trade to breathe with their stop losses so tight because they're scared of taking a loss because it's a be all end all accounts. Now we're going to explain why it's important to have multiple accounts, but I'll get into that now. This is kind of what a playbook looks like. So it's all my trades that I know has worked, and it's the same strategy over and over again with all my confluences aligning. So I look at this every single day before I actually enter a position, right? Because then I know what I'm looking for in the markets, right? Next thing would be daily report cards. Now, a lot of people leave this out as they think it's not really important. But what is a daily report card? It's basically to track your performance on your trading career. So what I like to do with my students, we have a journal system set out for them, but it is simply, actually monitoring your performance. For example, risk mitigation before, stop loss. Are you hitting your stop loss at full 1% when you could have actually cut it in half? These things are important, and I like to capture my data within the week. Okay, 4 out of 5, 5 out of 5. Then you can see where you actually need to improve. If this is something you're really good at, then you won't need to improve on it. For example, another one, A grade setups, actually taking A grades instead of B grades and C grade ideas. This would obviously be less confluences as you go down in the grading system. Are you sticking to this? Because if you aren't, this is also going to cost you funded accounts, cost you money because you're trying to trade C grade ideas when essentially we should step away from it completely. Your psychological review, how many trades are you taking? How do you feel during the trades and after the trade is very important as well as before. Are you tired? Are you taking the trade late at night when you shouldn't be? Like your emotional state throughout the trading career as well, and your performance. Then you'll obviously track yourself on a monthly basis. This is more due to when you've passed the account. But yeah, so these things are very, very important. I'm not going to go too deep into it. I'm going to leave a link on the top right. You'll see a notification come up of actually how to increase your win rate. What we've taught our guys, and then essentially breaking down this to the T of what you should be looking at on a day-to-day basis to increase your win rates, right? The next thing would be capital and funded accounts. So many people are buying capital or funded accounts that are way out of their price range, or they're not even maybe psychologically ready to be trading $100,000 account or $50,000 account, maybe even $25,000 account. You jump into a bigger account size because you are simply wanting to make money now. If I pass this $100,000 account and I get a 3% payout, that's $3,000. But you're not psychologically ready to trade that size of accounts because it's going to mess with you mentally when you do take losses because you're not used to taking, $1,000 loss on a trade. You're used to taking maybe less, $50, $100. So it's important to scale up properly according to your capital and your mental state too. So we understand what capital you're working with. So for example, if you are, I have two examples here, 10,000 Rand or more or 5,000 Rand or less. Keep in mind, it's important to have trading experience before you even jump into a funded account because again, you need to have a high win percentage in order to complete this. So if we look at it by purchasing accounts, 10,000 Rand or more, essentially what you should be looking at is buying 3 accounts. Now, why do I say this? Why should I buy 3 accounts? Why don't I just buy $100,000 account for 10,000 Rand then? Well, I'm going to get into that, but it's something about splitting up your risk. So at the cost at the moment with Vault Funder, you're going to hit $675 for, 3 $25,000 accounts. It's 11, almost 12,000 Rand. But then obviously with code Legacy 35, you get 15% off and it comes to about 10,139 Rand if you use the code. Then we have 5,000 Rand or less. This is a nice one too if you don't have a large sum of capital. Buy 3 $5,000 accounts, the cost is going to be $180, but then with the code, it is basically 2,703 Rand, which is actually under the mark, which you still have excess capital to buy another funded account if you drop them. So ideally, I believe for myself, two-phase accounts is not essentially where I want to be at because I don't want to be sitting there for hours or for days trying to pass the accounts and hit, 5%, then 10% the next time. I mean, that's overall what 15% that you kind of have to reach, or it's a bit much. Where essentially I would just go for the one phase, which the target reach is 10% straight off the bat. Now, if we look at it, max daily loss is 5%. Okay, max loss is 10%. Right now, I'm going to put into perspective why it's important to understand this. Profit target is $500 on the $5,000 account. So we're going to work with the $5,000, but obviously just convert it for the 25 or 50 or whatever account size you are currently using in profit target. So 10% is the profit target. Now, the goals you should be focusing on, and I said this in the beginning of the video, is do not treat all your accounts as your be all end all. Why do I say this? Because you're not always going to pass an account. Most professional traders fail a lot more accounts than they pass, but when they do pass an account and they get a 3% payout, it covers for all 3. So theoretically, what I'm basically saying here is if you had a $5,000 account, right, 3% of it is what, $150. $150, what does the account cost? $153. Okay, so maybe just doesn't cover the cost exactly, but that's on one trade. If you hit 3% using your risk management, risking 1 to make 3, you can literally make your money back on a single trade for all 3 accounts if you had to drop this one and pass the last one, which inevitably actually increases your passing rate because now you have 3 chances at a percentage rate of max loss 10%. Okay, so that gives you basically 30% out of a $15,000 account to try and pass the accounts, so call it. So one payout is going to cover the cost of the 3 accounts that you just passed, or one of the accounts that you passed and 3 accounts that you just bought. So that's important to understand because that's why I say don't treat your account as your be all end all. Because if you pass one, you're going to be able to pay for all 3 if you get the payouts. Okay. You will need a win percentage of 60% to stay above the max loss and pass the account. So in order to actually make money, pass the accounts, and still stay above the loss mark, essentially you need to, out of 10 trades, hit 6 trades out of 10 to pass the account and make money. Essentially, this is at a rate of 1 to 2% per trade. If you hit 1 to 3, your win percentage can be a little bit less, but I'm working off a 1 to 2, meaning risking 1% to make 2% in order to pass the account, right, at a reasonable rate. Keep in mind, if you win 6 times, you're an excellent trader in a row, but if you don't, there's going to be losses in between. So it's important to have a good risk management protocol. Here we go. If you do not have a 60% win rate, then this is the problem: your trading strategy, your playbook, your trading rule. Are you applying your rules correctly? Are you applying your strategy correctly? Are you staying consistent to your rules? If this is not in play, you are not going to have this 60% win rate. And that's so, so important, right? With each account, you are able to split up your risk. That's what I was talking about when it comes to buying 3 accounts. You only have to pass one and get a payout of 3% to cover all the costs, right? So the example I'm going to use here is a $25,000, right? So for example, $25,000 times 3, we're sitting at $75,000. We took a buy on Euro USD, as you can see, and we made 4.72%. Keep in mind, this is on a bigger account, so I just wanted to use some screenshots to explain. But here's a sell on Euro USD. We're down 3%. Then on this account, on the next account, we are up 3% again for $750 that we just made. Okay. So that means overall, we're up 4.72% on the account, right? So that's still good. Over all of your accounts, you're still up 4.72%, right? That's a beautiful thing about splitting up your risk. Not only that, I mean, you don't have to trade the same account every single day or trade all 3 accounts on the same day. That's stupid. What you should be doing is splitting up your risk on a daily basis too. Trade one account on Monday, trade the next account on Tuesday, trade the next account on Wednesday. This is helping you split up your risk completely. And if you're down on the one account and you simply want to take a great idea and you see an A plus setup, take it on the account that's in the negative, because your chances of hitting profits on that is a lot higher, but because your percentage rate of hitting an A plus setup is a lot higher. So yes, you can take it on 2 accounts if you'd like, but ideally you want to split up your risk, because if that account does hit, 1% loss again, your negative account's going to be down 1%, and you want to protect your profits on the accounts that you're currently up. This is in the passing stage, the challenge phase, or if you're waiting for a payout. Okay, I'm going to get into that now too. What I've just showed you here, this is a good scenario of all 3 accounts, one account in the loss and 3 accounts up, because this account individually is up 3%. This account individually is up 4.72%. This account individually is down 3%. Okay, so it shouldn't be down 3% on a single trade. Keep in mind, risk 1 to make 3 or 1 to 2. This is just, again, a screenshot of another account that I used. Okay. Now, this is a good scenario, but let's say we had to flip it. Okay. Let's say we had to flip it. That basically means that 2 of your accounts are down, but 1 of your accounts still up. So that likelihood of that passing account is still there. To account, you're down 3%. Right, and this is on the payout stage. Once you've passed the accounts, right? Again, you're going to roll the accounts. This is so important. You are rolling funded accounts because, as I said, one payout from your $5,000 account of 3% pays for all 3. Now, this does not mean just simply trade one account again. Buy 2 more. Buy 2 more, and you're still making your money back for the account you just paid. Buy 2 more, because ideally you want in the passing phase 3 accounts so you can switch between, so you can split up your risk. The reason why I say this is because of this scenario here. Okay, one account is up. One account is up 2.5%. That means you are guaranteed money. Okay, you're guaranteed cash. This account, you still need to get back up. This account, you still need to get it back up. But do I need to trade this account again? No, I don't, because now you don't want to press your funded account up to 10%. I mean, there's no point of that. So when you push the account up on a single trade to 2.5, 3%, sit on the payout, because that's $125. Okay. So on this account, you just made $125. This account, you're down. This account, you're down. But now you're in a mental state of, okay, cool. At the end of the month, I'm making money, right? On the $5,000 account size. I'm guaranteed money at the end of the month or when the payout does come. Now all I need to focus on is these two accounts, right? Because now if I get these accounts up, like this one, maybe to 3% after trading it and taking A grade ideas, then I'm just adding to my bankroll. I'm just adding to my bankroll. Now it's another $150 that I'm earning, right? Then this account, maybe it goes back to break even at the end of the month. So break even, 0% gain. Now you basically gain $275, right? That's your guaranteed payout. This is money. So I see a lot of people rushing their funded accounts to try and get payouts. They're trying to focus on one account. Can I tell you, my personal opinion is that whenever I'm focusing on one account, that's essentially when I take a loss. When I get in my head. When I'm managing three accounts, I can split up my risk because then I can guarantee myself a payout and guarantee at least one passed account if I'm still in the challenge phase. Again, nothing is going to happen unless you have this sorted out. Your win percentage is going to go up. You're not going to pass accounts. You're not going to get payouts from your funded accounts. You're just going to see you wasting money, more and more money as you go along, trying to buy more accounts, trying to pass it quickly. I think the important thing is do not rush your funded accounts. The beautiful thing now, when I first started trading funded accounts, is that there was a time limit of 30 days that you had to pass. Now there is unlimited. You have an unlimited time period in order to pass the account. So why rush it? Wait for those A plus setups. Wait for those A grade ideas to come through because that makes you dollar. It makes you money. So stick to your A plus setups because this equals this, right? And your win percentage on these trades on your A plus setup is 80%. If you have a good strategy and you've seen your win percentage go up, I know my strategy is 80% if I follow my A plus setups. So if I stick to that, right, and I'm risking 1 to 2, I only need to win 5 trades because that equals 10%. 5 trades in a row, 10%, right? And that's at a 50% win rate out of 10 trades. Again, but that's if we're not hitting every single trade, profit, 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 but at least I can get probability in my favor. That's what you want to focus on, probability in your favor, because then this 10% target becomes a lot easier to reach. Now, if you hit 1 to 3s, that just fastens the rate of pace, right? Now, we need to be careful because if we're not taking A plus setups or A grade setups, our win percentage is going to drop and our chances of our percentage of passing the account, right? Passing the account can become less than 30% because we're taking stupid trade ideas, So it's important to focus on your A plus setups. It's important to not rush your trades. It's important to have multiple accounts. And that's why I say, understand the capital that you're working with, because then you can focus on getting $5,000 accounts. If you have more capital, focus on $10,000. Now, the beautiful thing about this is then as you get 3 accounts, let's work on a $25 basis. I'll make 3% on all 3 accounts, right? All 3 accounts equals $750, right? Times 3, which will equal $2,250 cash in your bank, right? That's if you get 3% on all 3 accounts on the $25,000. What you're supposed to do with this is scale up your capital. Scale it up so that you can start to earn more. Buy two $50,000 accounts, right? Because now what this allows you to do is if you pass one of them out of the two, you're also not rushing challenges because you know you have three past accounts, right? So you're not rushing your $50,000 accounts. So if you pass one, right, $50,000, and you make 3%, that equals $1,500 in your bank. Even 2%, $1,000. Now we start to look in trading terms, some proper capital. $1,000 is almost 20,000 Rand at the moment. The calculation is probably 18,000. Okay, 18,000 Rand off $1,000 account payout. Now you can again take this by another $50,000 account, because then essentially you can have three 25s, and this is in terms of 25s converted. If you have 5,000, scale up to 10, scale up to then 25 or 15, then scale up to $25,000. But you want to maximize your payouts. Two $50,000 accounts that are passed, right? Now, let's say you get 2% on the $25,000 accounts times three, that is $1,500, right? Money in your bank, $1,500, and you get a 2% on both of the $50,000 accounts. That's $2,000, right? Now we're looking at $3,500 in your bank, and that's 2% ratings. So you can see why taking your time with the accounts, not treating it as your be all end all, because you will fail more challenges than you pass, but those passing of the accounts will pay for the accounts that you buy and continuously scale up. Because essentially, when you scale up to $50,000 and you're hitting 2%, that's a 1 to 2 on a single trade. Even if you don't hit on the same account, one is down 1%, the other one is up 2%, sit on the payout, because then you're guaranteed money at the end of the month. This is how I build my capital in my funded accounts, build my capital for my investments, get salaries from the trading industry, because I'm focusing on scaling up my capital, right? Scaling up to $50,000, $100,000, whatever the case may be. I'm scaling it up so that when I'm at a point, I can make a 2% payout and actually get a lot more money out. I can make on $100,000, I get 3%. I'm making $3,000 on a single trade. What's the point of you trading a 10,000 Rand account now and hitting a 10% payout? That's only 1,000 Rand. So learning to take that capital, putting it into funded accounts to scale so that you can make bigger payouts, and leveraging it to make more profits, and leveraging your funds not to buy one single account, but to split up your risk so that if I had to take that $10,000, 10,000 Rand, sorry, and put it in $100,000 account, I know if I'm taking the first trade of the account is down 1%, then the next trade is down another 1%, and so etc. etc. Now I still have to bring up my account back to break even, 0% gain or loss, in order to actually pass the account. Now that I have to make three trades or one trade to make 3% to get it to back to break even, and it's just setting you back. Whereas if you split up your risk, you just have more of a chance passing the count and guaranteeing yourself payouts. But I'm definitely going to do a part two on this. I'm going to get deeper into it, where you should put your funds, the investment sector, how to build portfolios once you've gotten to this stage here, once you're making money, so that you can eventually see this trading and turning it into a business. If you learned something, peace out.